Welcome to your Mortgage Insider update for this week. Following the Fed meeting last week, we had a surprisingly poor jobs report on Friday. So a lot of push the can down the road from the Fed, but followed with this weak report, we had a pullback in interest rates going from 7.3% down to about 7.2% this week. So a little bit of a pullback. We're going to check out the charts and see how this is going to play out. At midweek, we have mortgage-backed securities up 11 basis points after a pretty good start to the week where we've improved. Now, remember, mortgage-backed securities will actually, when red is bad, if the price is dropping, then that means the consumer interest rate goes up a little bit. So we're going to see how that plays out on the charts in just a second. But the 10-year Treasury, really the big item here is that it's below 4.5%. It's up 3 basis points today. Let's check this out. We can see this is after multiple day run, basically all of May. Having downward action down below the 25-day average here, not quite making it to the 50-day average, so we've mushroomed here. We've got a ways to go to get back to better rates of, say, early April. On the inverse of that, mortgage-backed securities chart, this is rising, so as the price rose every day in May, we've had an improvement in the interest rates. So this was relative to the week that we saw interest rates come out around 7.3%. We've seen a pullback, so this last week, and potentially closer to 7 this week, 7.1, unless we can take the next level here and same sort of charting. 25-day average, we broke through that, have really slammed into the 50-day average, so that seems to be kind of a ceiling. Next round of news is going to be the Consumer Price Index, which comes out middle of next week. So for now, we might hang out in this area, pretty tight little range here. Definitely not interest rates that were as good as back in, say, early April, just like we saw in the 10-year chart, but an improvement nonetheless. So we'll take the CPI report in stride next week, hoping to maintain a little bit of a leveling off, an improvement in interest rates from the highs back in early April. That does represent a high that we haven't been at that level since October of last year. So definitely a little bit of a whipsaw. If we have a positive CPI report, meaning if inflation can calm down a little bit in the consumer price index, then we could see further return to, say, a rate below 7%, which would be excellent. But for now, we're just going to barrel ahead. Have a great week. Sell some homes.